Welcome back. Well, CONCOR is the next management on the show. The company reported a sluggish past quarter. The volume growth continues to be below its guidance. To discuss this and more, we're joined by Mr. Sanjay Swarup, the CMD of the company. Hi, Mr. Swarup. Good morning, and thanks a lot for joining in. Well, when you joined earlier, you were talking about a volume guidance of around 18 to around 20%. Now, at the half-year mark, you're trailing on both the EXIM as well as on the domestic volumes. So break it up for us. Is there a revised guidance you want to give us on both these two segments? And for a consolidated entity as well, what should the volume guidance look like now?
Good morning and happy Diwali to all of you
happy
and
Diwali,
your viewers. I would like to compliment the festive attire of Prashant, Surabhi and Nigel, all three of you.
Thanks a lot, sir. They're feeling good here in the studio festivities.
Yeah.
Please go ahead.
Yeah. So as far as your question is concerned, of course, the volume growth has been around 3.5% in EXIM and around 15% in domestic. That gives an overall growth of 6% for the first half of this financial year. This year has been challenging for us as far as the EXIM is concerned because of the various geopolitical reasons all of you are well aware of. And domestic also, in Q1 we posted a good growth, but in Q2 it was slightly muted because we got very good rains this year in Gujarat and North India. So because of that our loading suffered. But now I'm happy to inform that loading is picked up in domestic very well. In this month we are doing quite well, and EXIM also, there are firm indications that we are going to get very good business of rice exports particularly, and imports are also picking up.
Mr. Swarup?
So, of course, yeah, it just, it is challenging.
Mr. Swarup,
I will not like to change the guidance.
So you're holding on to the guidance of 18 to 20% overall volume growth for this year. Are we understanding that correct?
Yeah, I'm holding the guidance for 15% growth in EXIM, 25% in domestic. That makes overall 18%. I'm holding on to that guidance now.
Okay. All right. Got that. You know, what about realizations? Could you tell us how that is shaping up? It's good to see volumes are coming back, but how have realizations been both on EXIM as well as on domestic volumes in the past quarter? And any revisions going ahead?
Realizations, if you see, realizations have been quite good. We posted a very good net profit of growth of 4% year on year. And despite the 25 crore hit that we took because of the net of tax, because of the exceptional item, because we settled a claim of Vivad Se Vishwas of Government of India. Despite that claim, we posted a handsome profit. In this financial year, EXIM is showing good profit, and domestic also we are getting both side movements now. So empty running is coming down. So we are very hopeful that we will be able to further improve our results in the remaining half of this financial year. And we will be posting a very good realization, very good profit also in the financial year.
So how much higher will it be, realizations in comparison to your past quarter?
Our realizations will be improving because there will be various reasons for that. First is the customer centricity and operational excellence that Team CONCOR is practicing. Because of that, our realizations are improving both in EXIM and domestic. Then we are putting North India on for the movement towards from North India to Nhava Sheva. Of course, the DFC is not commissioned up to Nhava Sheva, but we will be giving the benefits of double stacking and DFC to our customers of North India, because we have a terminal at Varnama which is connected to Indian Railways, and DFC connectivity will be happening by the end of November. So from November end, we will be starting double stack trains from North India up to Varnama. From there, we will take single to Nhava Sheva. It's a distance of only 400 kilometers. So that will the benefit of predictability and cost will be coming to the customers of North India for movement towards Nhava Sheva. Secondly, we in domestic, we are getting a very good demand. Then we are going for bulk cement transportation in tank containers, and we have ordered tank containers from our sister PSU, Braithwaite Corporation of Calcutta. And yesterday only I had a meeting with the CMD of Braithwaite. And from December, we are going to get supply of tank containers, which will give a further boost to our domestic loading. There is a lot of demand. We are in touch with our customers. And in exports also, as I mentioned earlier, rice exports are going to pick up now.
Yes. Yes. Mr. Swarup, could you give us a margin number though? There was a moderation in railway cost as well as land license fees that aided your margins in the last quarter. But going ahead, what kind of a margin number should we look at very quickly?
Yeah, we will be able to, we have posted an EBITDA of around 25 to 26%. We are very confident of maintaining this EBITDA level because railway cost will be, we are controlling because of the reduction in empty runnings that I mentioned earlier. Land license fees issue is sorted with railways, so it will be at the same level. So we will be able to maintain EBITDA of 25 to 26% in the,
Thanks a lot, sir, for joining in. Wishing you all the best for the second half of the year. You're promising some good numbers. We look forward to delivery.